Have you ever heard someone say, renting is throwing money away? This is a comment I hear a lot from my students, and it always makes me want to challenge them. Jedediah Collins here with the Money Vehicle Movement podcast, where we're trying to make financial literacy more current and possibly even a little cooler. Too often, we isolate our financial decisions and only see the upside. This company is going to the moon. This purchase is worth the cost. And of course, this home is going to be worth more. Never wanting to make light of a disaster, but always looking to educate, we must see what is happening in California and take note of its lessons around how all of our financial decisions are connected. Insured losses can be in the range of $30 billion from the devastating fires out in California. And while we want to send our prayers to those impacted, we also want to take away lessons from what is happening. California created a government run FAIR plan, similar to the idea that is held in 30 other states. This government insurance policy plan operates with higher premiums and less cash than private companies. While originally it was intended to be a last resort for insurance, as private companies were meant to be the first option, decisions made within the state and private insurers leaving the state have required this FAIR plan to not only become a resort, but the only resort during this catastrophe. The biggest call out in this FAIR plan is how to choose who and how much to charge for the insurance. In Chapter 7, we learn about the risk class and how that is going to decide your insurance premium, and how sometimes this risk class unfortunately means you will not get insurance. This is because the insurance company does not deem the risk of insuring you worth the reward of your premium. And while it is a cruel measurement and decision, it's a sound financial philosophy on their part. However, in this FAIR plan for the state of California, they are required to approve any and all comers for insurance, including those who live in an area prone to fires. The other interesting call out to this insurance plan is that private insurance companies agreed to insure the FAIR plan. Privately regulated insurers agree to bail out the FAIR plan if needed as an exchange for doing work in the state, California in this case. The dollar amount was set to about $2.5 billion. We mentioned the expectation is supposed to be well north of that number. When the cost exceeds this amount, then the charge would be passed to the largest insurers in the state. Companies like State Farm, Farmers, Allstate, and Mercury Insurance would be left holding the bill. How much will be passed to each is based on their share of the market in California. This liability had already driven out other national providers from the state, and now these private insurance companies are looking at the immense financial commitment in California and starting to wonder how they will adapt to it. What we know of insurance companies is that they are businesses. They're looking to make a profit. So who is really going to get past this new cost? You and I, the insured. Both in the state of California and nationwide, these costs will be passed to each individual covered by the private insurance company through increased premiums. This puts further pressure on an already fast rising insurance rate. And while early reports is that they will be able to handle the costs as insurance companies, it is a warning sign of what's to come. Combine this increase in your homeowner's cost with this week's announcement of a mortgage rate tipping over 7%, and you can see why we bring the comment, renting is throwing money away, to question. Again, not to make light of a disaster, but always striving to educate, we have to look at the overlooked responsibility that comes from owning a home. In renting, you're not throwing money away. You are paying to live in a place you do not want the responsibility of owning. Just as everyone wants to look at the upside of being the CEO and overlooks the responsibility of wearing that crown, students see the upside of owning without the responsibility and downside of owning a home. Our thoughts and prayers go out to California, my home state, and where my family still resides, and all of those impacted. Our message to speak the language of money goes out to students to show them that all financial decisions are connected and have an opportunity cost. Stop thinking of rent as a waste and start to see it as a decision not to own, but to use. Understand these two things as you do look at home ownership. The price of debt, your mortgage, has just risen 7% depending on your credit score, and you have to weigh the opportunity cost of using those dollars. Number two, the price to protect your asset in insurance is continuing to rise through your premiums, and your past choices will continue to rise with them. Keep speaking the language of money, drive in your money vehicle, and we will see you at the next stop.